Hi, good morning, everyone. I hope you're all well today, and welcome to another session in our Global Entrepreneurship Week. Today, we are at our Raising Capital Forum, and this, I hope, will be a very interesting discussion. Global Entrepreneurship Week, GEW as we know it, began in 2007 and is recognized as the world's largest celebration of innovators and job creators who launch startups that bring ideas to life, drive economic growth, and expand human welfare. This aim is to inspire people everywhere through local, national, and global activities designed to help them explore their potential as self-starters and innovators. JBDC is once again during this global movement in an effort to highlight emerging and creative industries. We facilitate business-to-business discussions and encourage business startups on a national level. Against this background, we will mark GEW celebrations during the internationally scheduled week of November 8th to 14, 2001. And we are celebrating under the theme, Reboot, Rethink, Regenerate. Welcome, everyone. It has been over a year since this COVID-19 pandemic unfolded, and we now look ahead to serious work of rebooting our communities and economies for a better, more sustainable and equitable post-pandemic world. Our national boundaries are as porous to the new ideas as they are to coronavirus, making it imperative for all of us to seize the opportunity to reboot and help those most severely impacted by the economic downturn rethink together as one global ecosystem and to regenerate lost jobs while helping all economies to rise on an incoming tide of entrepreneurial potential. So the Raising Capital Forum, it is one of JBDC's intervention that we use as we help our clients be financially ready and also literate. And so as such, it was designed to explore various forms of financing available in the market. Fintech, a portmanteau of financial technology, is the application of new technological advancement to products and services in the financial industry. And the Jamaica Observer would have shared recently an excerpt which says the global fintech industry is growing at an annual rate of 23%. And even before the arrival of COVID-19, an estimated 64% of consumers had used 2 or more fintech services or platforms. Now, following the acceleration of digital adoption during the pandemic, a massive 74% of Americans now view fintech as part of their new normal. The demand then is massive. One of the major components of the fintech success story is that its startups have lost cost models. I am Jacqueline Lloyd Carter, and I'm your moderator for today. I am the MSc Financing Specialist here at JBDC. And with us today are some very interesting panelists. And they are Ms. Chanel May, Mr. Rodolphe Burgess, I'll introduce them a little later on, Mr. Michael Clare, and Mr. Scott Edwards. Welcome everyone to today's discussion. I hope the discussion will be a robust one, and it is usually said that financing is boring, but I know when we're talking about money, it's never boring, is it? No, it's not. So, we will be looking at areas such as why fintech companies are important now more than ever.
Okay.
We'll be looking at the Fintech Regulatory Sandbox guidelines. We'll also be exploring how fintech companies are supporting access to financing for MSMEs. And also we'll be looking at the requirements for MSME to accessing finance through the Finance Hub platforms. So we'll be having a discussions, and of course, if you have any questions, you can put your questions in the chat, and we will be looking at questions at the end, where we'll have a question and answer segment. All right, so to begin, I would like to start with Chanel, and I'll just introduce her. Chanel is an attorney at law.
Chanel.
Chanel, thank you so much for that correction. Is an attorney at law and an associate of the law firm Myers, Fletcher and Gordon. Her practice areas include securities, banking and financial regulation advice, tax, intellectual property, sports, media and entertainment law. She graduated from the University of the West Indies with a Bachelor of Law, First Class Honors, and Normal Manley Law School, and is also a proud graduate of Campion College. Chanel also sits as a director on the board of the Campion College Alumni Association. She holds a postgraduate diploma in corporate governance from the Jamaica Stock Exchange in association with the Private Sector Organization of Jamaica, and a certificate in compliance, ethics, and corporate governance from the JC's E-Campus. Outside of law, Chanel has a passion for sports, teaching, and learning. She's an avid member of the netball community. And can I tell you, she was dubbed the youngest individual to qualify as a netball umpire in Jamaica at age 11. She currently sits as director, and of course, she would need to, of the board of Netball Jamaica. Chanel, welcome to this segment, and I really look forward to hearing from you as you speak to us on the Fintech Regulatory Sandbox guidelines, why fintech companies are important more than ever. Talk to us.
Hi, good morning. Thank you for that introduction. Welcome everyone, and thanks for joining. I hope that this presentation will be useful to you, whether now or in the future. So in the onset of the COVID-19 pandemic, a lot of people started to rely on financial technology way more than ever, because we couldn't go in office, or we couldn't go to a bank or go to the supermarket. And a lot of people for the first time heard the term fintech. But the thing is, this is not really a new concept. The term fintech has been around for a very long time. However, the regulatory landscape around fintechs is fairly developing, not only in developing countries, but in developed countries. So in around March 2020, around the same time the COVID-19 pandemic hit Jamaica, the Bank of Jamaica issued a notice advising that what they had, which was the guidelines for electronic retail payment services, were being withdrawn, and then it was going to be replaced by what we now have called the Fintech Regulatory Sandbox guidelines. These guidelines are issued pursuant to the Payment Clearing and Settlement Act, and they cast a much wider regulatory landscape than the original guidelines for electronic retail payment services. So rather than just focusing on what we understood as the buying and selling of goods electronically, the new Fintech Regulatory Sandbox guidelines kind of now take into consideration all fintech services and products, ranging from banking, business, e-commerce, securities dealings, anything that would fall under fintech. Under the guidelines, fintech has a very general definition. It's defined as any technological innovation that is utilized in the provision of financial products and services. When you read that, you're basically saying that's almost everything. We believe that was intentional by the Bank of Jamaica to ensure that any new product that may come up would be captured within their regulatory net. Under the guidelines, regulated entities and fintech companies, and I'll define those shortly, who wish to offer any payment services or any other financial services will be allowed to operate in what you call like a sandbox. So like a closed market testing arena upon satisfying the eligibility requirements in the guidelines. The eligible applicants are regulated entities, and this includes deposit-taking institutions we know as the commercial banks, cambios, remittance service providers, securities dealers, credit unions, and fintech companies. Recently, the Bank of Jamaica also had another provision that says any entity who wishes to invite to the sandbox can fall under an eligible applicant. So for the most part, regulated entities we are familiar with, but people then ask, well, what is a fintech company? A fintech company is defined under the guidelines, and it's defined as a company that is not a regulated entity that plans to utilize fintech to provide financial services. Very roundabout, but again, we think it's very intentional for the BOJ to kind of feel out the arena, have an idea of who they should be regulating, because we know that they take financial services in Jamaica very seriously. Recently, the guidelines were updated to clarify that a fintech company who's an applicant under the guideline must be incorporated under the Companies Act here in Jamaica, which means that they want the company to be a Jamaican company before they can even come to Jamaica to offer this fintech service. Since the publication of the guidelines in March 2020, there have been 3 updates to the guidelines, the most recent being in July of this year. Most updates have really been just to tweak and clarify anything that people were uncertain about. For example, whether or not a fintech company had to be a local company or it could be an overseas company. Generally, in order for a fintech company to be a participant in the sandbox, however, it must partner with a deposit-taking institution, which is a bank. The fintech company cannot apply on its own. The guidelines also state that when the fintech company partners with the DTI, there must be some contract in writing, but the BOJ hasn't really expounded on how the partnership should be structured. The only guidance they've given so far is that the bank is responsible for conducting its own due diligence and risk management of the fintech company prior to the application to the Bank of Jamaica. So that's a little bit interesting to see how that will play out. So in Jamaica, to become a participant, once you're an applicant, you will then have to fill out an application form, submit a myriad of documents ranging from your constitutive documents like your articles and certificates of incorporation. You also have to provide letters from the Chief Executive Officer, board resolutions, the directors and substantive shareholders, meaning shareholders holding 10% or more in the applicants, will also have to provide like fit and proper questionnaires. So it's very similar to how generally regulated entities operate now. You have to go through a very thorough process. Once you pass that process and you're approved, your product will operate in the sandbox for a period of no more than 2 years. The BOJ, of course, will advise. There may be a possibility for an extension beyond the 2 years if for some reason the Bank of Jamaica believes that there's some risk and they want further testing. During the testing period, there are certain safeguards that have been put in place with the financial products, and they include stuff like financial liability exposure, consumer protection, risk management, anti-money laundering, regular regulatory limitations. What's interesting about the sandbox guidelines is that while the guidelines set out all you need to do to apply to enter the sandbox, it doesn't really explain what happens after you're approved and you're successful in the sandbox. We assume that as the BOJ begins to test more products and understand the atmosphere of these new fintech companies, they will of course issue more guidelines and advisories. We understand that not a lot of companies so far have been approved from the sandbox, but I do understand the Bank of Jamaica is encouraging those fintech companies out there to reach out to them, contact them, find out whether or not they would fall in the sandbox, and just to help the regulator develop this landscape here in Jamaica. Because now that we are, I would want to say, on the other side of the pandemic, I believe that fintech will be a very important part of our lives going forward. It will open up doors for a lot of people when it comes to availability of for certain services, and it will just be more efficient. So that's my short on the fintech sandbox regulatory guidelines here in Jamaica.
All right, that's a lot, and that's a lot of information for us to take in. And I'm sure there'll be some questions coming at you. I just want the others to share their point of view with respect to where they are in the whole rethinking financing, fintech companies. And so I'm going to thank you so much, Shanil. I am going to ask Randolph Burgess, to share with us on how fintech companies are supporting access to finance for MSMEs. And he is the IT and projects manager at the Lasco Microfinance Limited. And just a little bit about Randolph is that he joined the Lasco Financial Services in October of 2015, bringing with him his considerable years of experience in customer service, technology, and project management. Randy, as he's affectionately called, has grown with the company and was appointed the IT manager in 2019. He has led various projects to improve the company's operational processes and information service platforms across all aspects of our financial service business. Randy is keen on using technology to advance organizational goals and to transform information technology from a cost center to a revenue generating business partner. He is customer focused and believes that all processes should reflect on a positive customer experience. Randy holds a BSc in political science and public administration from the University of the West Indies, Mona, and is a certified project management professional. So let's hear from you, Randy.
Thank you, Jacqueline.
No problem.
Good morning, everyone. It's a pleasure to be here amongst this esteemed panel and our distinguished guests. So fintech, financial technology, it's the buzzword in and around financial markets, businesses, and in the general public. Certainly, most of us today, knowingly or unknowingly, interact with some form of fintech in our daily lives. From making cash deposits or withdrawals at ATMs, paying online for services, or perhaps the most popular, paying for items on Amazon using our locally issued Visa or MasterCard. Traditionally, these types of transactions have always been dependent on consumers having some interaction with a bank. You would need to have a bank account, qualify for a credit card, and even more qualify for a credit card that allows you to make overseas or online purchases. Fintech is buzzy, and as Shanil said, it's not brand new. ATMs, for example, were at one time on the very cutting edge of fintech innovation. In recent years, we have seen a breakdown of the banking walls as financial services have become more accessible and less dependent, at least from the customer standpoint, on the traditional banking system. A major mover in our local market have been prepaid debit cards, such as Lasco Pay, backed by Visa or MasterCard. In some markets, mobile wallets are the carriers of this convenience, offering users the ability to convert cash to more flexible and easily transferable payment options. Prepaid cards, mobile money, internet purchases, today probably lie at the base level of fintech, and in many markets are now the consumer transaction standard, with cash, checks, and to some extent even bank transfers becoming less and less relevant as a means of payment. I'm still intrigued by a sign that I saw at a restaurant overseas that stated "no cash accepted." I wonder how many of us here are ready to put up a sign or make a post like that for our own businesses. Traditionally, the financial services sector isn't seen as flexible, but today, adaptability and instant gratification is precisely what consumers and business owners expect and increasingly need. Fintech helps to expedite processes that once took days or weeks, like requesting your credit report, accessing loans, or sending money overseas. So how does this benefit you, micro and small business leaders in Jamaica, seeking to sell more products, generate profit, and access the financing to invest in and grow your business? It is recognized that especially small and medium-sized business owners heavily invest their time being physically at or involved in their business. It is only right. You are competing for limited funds in a highly competitive market, and there are only so many hours in a day. So the less time you have to spend sitting in front of a loan officer applying for a loan or waiting in line at the bank, the better. How do we avoid the high cost and security risk of cash management? How can we spend more time running our business, creating new products, taking advantage of new opportunities, while still having access, easy access rather, to the financial services we need to operate and expand? Well, let's plug into Fintech. At Lasco Financial Services, we have been developing the concept of our digital customer. We are seeking to provide an online ecosystem through which customers, and importantly our MSME clients, can access our financial services. We were the first financial institution to present and get approval in the BOJ Fintech regulator Sandbox with our LascoBiz product. The LascoBiz merchant membership program provides MSMEs the ability to accept all card payments and participate in e-commerce using a virtual point of sale. With LascoBiz, merchants can track sales and expenses, produce invoices, and enjoy other great features and benefits from the convenience of their smart devices, anytime and anywhere. An important point here is the integration of an accounting module that allows merchants to track sales and inventory and produce financial reports. Diving further into the ecosystem, this allows MSMEs to bring more formality to their business and the ability to present a structured business case to financiers. In fact, a driving force behind this product was the recognized challenges we observe facing micro businesses, especially when they attempt to obtain loans. Of course, as an integrated financial service company with a focus on accessibility and convenience, without leaving your place of business, you can apply for a loan at Lasco Microfinance and submit all the relevant requirements, including pictures or videos of your business, all from your own convenient and safe space, with as little need as possible to visit our offices. Importantly, using technologies, we are able to collect aggregated data that can drive product innovations for your consumers and present them with the same or even greater levels of convenience. Internally, we are enabling technology to drive our back-end processes to respond to your financing needs quickly, conveniently, and safely. There are some challenges. Laws and regulations have some way to go in facilitating financial technology. Jamaica is still very much a cash culture, and there are trust and connectivity issues to be addressed. But Fintech is undoubtedly the way forward. Jamaica is primed to take advantage of the opportunities financial technology has to offer. The MSME sector, as a driver of economic activity in Jamaica, must think digital first and plug into Fintech for sustainability and growth. Thank you, and I look forward to the discussions and questions to come.
Of course. Thank you so much, Randolph, for sharing your perspective on how Fintech companies are supporting access to finance for MSMEs. And I'm sure you'll get some questions as it relates to how do you find the customers coming out of the cash culture, or I don't know if it's slow or fast, but Those will come a little later. I don't know how the progress is in terms of changing the culture. But we will talk about that a little more. Next, we'll hear from Michael Clare. And Michael Clare is a Jamaican Canadian business leader, an entrepreneur and technologist over 25 years of with over 25 years of global business experience. Michael is the founder and CEO of Loan Cirrus Limited. Loan Cirrus is a software company which provides solutions for the financial service sector. Loan Cirrus distributes software via the software as a service, SaaS model, and is US dollar denominated business, is a US dollar denominated business. Loan Cirrus is registered and started in Jamaica and has customers globally. Michael has led organizations and teams on 3 continents and 6 countries. He was appointed vice president of a Fortune 500 restaurant group, at 30 years old. His success in corporate was only a precursor to his success as an entrepreneur. Passionate about betterment in every facet of life. It is also the reason for his love of technology and entrepreneurship. Technology is all about betterment. Michael spends most of his time in Kingston, Jamaica, but also lives in Toronto, Canada. Michael.
Good morning.
Share with us on how fintech companies are supporting access to financing for MSMEs.
Good morning, everybody. My camera is not on because technology has failed me this morning, in that I can't put up my background image. So unfortunately, you can only get the pleasure of my voice this morning unless somebody thinks it's okay to turn on the camera, but that's not my business. But so the timing of this conversation, let's start with that. I think it's very good. Coming out of a pandemic, I think one of the things that's going to endure is a new collective consciousness about the importance of technology in our lives, not just as something that we sort of look at on a shelf and say, hey, there's some technology over there, but now we're really appreciating the fact that technology is something that we must embrace. It's something that's ubiquitous, and it's going to be ubiquitous in our lives. And it's something that actually can create a lot of value. Imagine if this pandemic happened in another era. We'd be just like we were in 1918, wouldn't we? I mean, so many people have been able to weather the pandemic storm simply because of technology, not in spite of it, but because of it. We were able to continue our livelihoods, et cetera, et cetera. Many businesses, many MSMEs, the only reason they're still alive, the only reason they're still viable is because of tech, right? So the timing of this discussion, I think, couldn't have been better. I want to talk about fintech a little differently. So there are copious amounts of definitional statements about what it is. But I like to talk about it in terms of what it must be in order for it to actually help the people we're here talking about, small businesses. So fintech really needs to do 2 things. And I'm on the tech side of fintech, and I'll explain that in a minute. But it needs to do 2 things. It needs to reduce friction. And much of the conversation focuses around that, friction reduction, creating a better customer experience. We call it access, giving more access. And typically the conversation is around the tools that we need to give more access, right? Create better experiences for persons who need those financial services and reduce the friction in that relationship. And that's one aspect of fintech. It needs to reduce friction. But the other aspect of fintech is that, and this is very important because it goes to the heart of why small businesses perennially, remember this problem we're talking about today is not new. It's a perennial problem. Small businesses have always had difficulty getting capital, haven't they? So what makes it so? Well, it's the second part of fintech, and the technology must reduce risk. Because the only reason why small businesses have a hard time raising capital, or let me say one of the main reasons they have a hard time raising capital, is because they're small. I mean, if you're a big company with a track record of experience and cash flow, you don't really have a hard time raising money. Money comes to you because money is always looking for relative safety and a return. So let's put the bullseye exactly where the bullseye need to be. Small businesses have a hard time raising money because they're small, and because their smallness increases the relative risk that they present to lenders of all kinds. So how does technology in the fintech paradigm reduce the risk, right? That's what I want to talk about today. I hope to get an opportunity to really expound on that, right? What are the technologies that are available to help reduce the perceptive and the real risk that small businesses present to lenders? And there are actually many technologies that are coming on the scene that will help to do that. Okay, blockchain is one of them. We'll talk about that and we'll demystify that as well. But the real bullseye for me is to ensure that the conversation focuses on fintech and the technology as being both a friction reducer, creating better customer experiences, bringing customers closer to those financial services, but also as a risk reducer, creating more transparency for small businesses so that as Randy said, and Randy, good to see you again, by the way, it's been years, but really it's about allowing small businesses and the people who want to support them to see more about their businesses, to understand more about how those businesses are really performing, and to do it in a way that is secure, that cannot be tampered with, that can be distributed so lots of people can see it and lots of people can take action on it. So my focus this morning, hopefully, will be to deepen that discussion and to really, I think, give the participants, hopefully many of them are small businesses, an opportunity to see what the future looks like. We understand what the past has been, we know what the present is, but all the opportunity, all the amazing opportunities right over the horizon. And what I want to do today is to shape that horizon and give you a view of it. Thank you very much for the invitation.
Okay, thank you so much, Michael, for your introduction. And I do agree with you, Michael, that because of the smallness, as you put it, of the companies, that there is a difficulty in getting capital. And I do agree that these are some of the answers that we want to get, or the know-how that we want to understand today. Finally, we have with us today Mr. Scott Edwards, CEO of Finance Hub Jamaica, and Mr. Scott, Mr. Edwards, sorry, you have, Michael, you have two last names. or Scott, you have two last names, Scott and Edwards. All right, so Finance Hub Jamaica was born out of the initiative of its directors, who, after spending decades in the financial sector, recognized the need to have a bridge between the customers and the various lending institutions. The website was professionally designed to capture pertinent information safely and securely in order to allow financial institutions to make competitive offer to these customers. Helping customers to achieve their dream became more than just a hobby or a business. It became a life passion, and which gave rise to the creation of this company to facilitate such. Being in the industry for over a decade, Scott's team recognized the gap between customer and the MSME and lending institutions, and have developed a seamless process whereby all customers and MSMEs can conveniently and in farthest time attain credit to achieve their financial goals, whether this goal is to acquire a motor vehicle, a home, to start a growing business. And Scott is here with us today to share on the requirements for the MSMEs to access finance through the Finance Hub platform. And we're getting home.
All right. Thank you for having me. Good morning to the guests. All right. Finance Hub was born out of the need to access credit. MSMEs, self-employed business owners, can access by using 3 requirements. So the first one they need to do is the business has to be registered, whether as a sole trader, partnership, or a limited liability company, has to be registered. That's the first thing. The next step, the business has to have a business banking account. It is important that your income goes through an account consistently on a monthly basis. Consistent meaning you can have a good month this month and then the next month we're not seeing anything and you're not up and down. Banks don't like to see that. The third thing is that you have to have an accountant. If you don't have an accountant, you have to be tax compliant. You have to pay your annual tax returns. So this is necessary to establish how much you can afford. And what the Finance Hub does, we gather the customer's information, in this case, a business owner, small SME. We break down your income, we work out your debt service ratio, we give you a credit point score, we work out your net worth, calculate your liabilities, and determine how your ability to access and service your debt. And we have been doing this for a number of years. I'm happy to see a number of persons from JBD come up through the ranks of JBDC have accessed credit through our platform, and it has been going good so far. So that's it. We're willing to answer any questions you may have. We partner with a number of institutions through the credit unions, commercial banks. So all of this in the aim of finding the best deal for the customer, whatever their needs are, whether it is to start a business, acquire equipment, get a vehicle, that kind of thing. That's what we specialize in. So we're open to having more partners and fielding your questions.
Okay. All right. Thank you so much, Scott.
You're welcome.
You were very succinct, and
Yes.
and I think persons are hearing what they want to hear. How do I get money? Accessing finance is really where we want to go. And the fintech companies, I hope, will guide us to being able to access finance, maybe at a faster pace. Michael spoke about, not Michael, so, yes, Michael, yes, spoke about reducing and creating a better customer experience, and also wanting to see technology reduce the risk that there is with accessing finance. And I think in terms of rethinking financing and the fintech companies, those are some of the questions that we want answered today. How can we, with all the regulatory requirements that Chanel spoke about, how can we, Lasco spoke about, Randolph spoke about the fact that they have been approved by the regulators. How do we get the MSME? And here at JBDC, our majority of our clients are micros. how do we get this pool of clientele to be able to access finance through the fintech companies at a faster and easier pace? And anyone can chime in at this point.
Well, they can visit the Finance Hub website. As I alluded to earlier, we only need 3 requirements. So first, the business has to be registered, has to have a business account, and has to have an accountant or be tax compliant. Once these needs are met, then they enter our database and then we find the best deal for their purpose. We make the assessment based on their income, we work out their debt service ratio and find the best solution with the various institutions that we partner with.
Okay, so that's access to finance in terms of loans.
Right, loans, correct.
All right, so how do you use technology to speed up the process, in terms of your having, you said earlier that you had to do their
Right, because everything is online based.
credit score and all of that.
So everything is online based. There is no need for a face-to-face interaction. We facilitate them emailing us the documents. It is put into the database online, and then we communicate that information to the various institutions.
Oh, okay.
So wherever they are in the country, even persons overseas can access financing through the portal that we have created.
Okay, okay. All right.
Yeah, so
Michael,
Jacqueline,
yes.
yeah, I just wanted to jump in there. I mean, I think one of the ways that MSMEs can really avail themselves of the opportunities that are out there. I mean, forums like this are good, and being aware of what is available. But
Yes.
business owners should also be challenging the institutions that they are going to. As we say, we want to be small businesses want to have less friction, have faster access, easier access, be able to still run their business and get access to the financial services that they need. So in as much as they may find opportunities out there, they still need to be challenging financial institutions to make it as easy as possible for them.
And I'm going to piggyback right on that point that Randy just made. It's Michael speaking.
Right.
So challenging the institution is exactly right. So we have to remember, we're here to upset the apple cart. The status quo has not worked for small businesses. Let's remind ourselves. If it had worked, we wouldn't be here. So we necessarily know that we must make change, don't we?
Yes.
So I see it. So the friction part of it, as I said, is relatively easy. It gets lots of attention. It's making things nice and easier and sexier looking, and making it something that you want to get into and use. But the risk part is what's stubborn. So let me speak about some specific things. I kind of look at it in terms of low-tech fintech and high-tech fintech. There's some low-tech things that we can do better to make MSMEs get better access. So let me give you an example. Many times when you deal with financial institutions of any size, micro or big banks, they don't have domain expertise. So if somebody is starting a construction business or has a small construction business, they're not speaking with somebody at those places who understand the construction business. They're speaking to somebody who understands regular financial ratios across any business. And so it's going to be one size fits all, because the ratios and the rules that are being applied to adjudicate are typically set. They're based upon things that are not necessarily going to be dynamically linked to your business reality. They're dynamically linked to a bunch of financial ratios. So the first thing I think we have to do is put in practice what we actually say, which is to bring the domain expertise at the point when we're dealing with those small businesses. Let them feel and know that we understand the uniqueness of their businesses. That's one of the things that gets in the way of understanding the risk, because you're speaking to someone who understands finance, but you're a farmer, right? And you're a farm business. And so what you really want to understand is the seasonality of your crops. Yeah, but they don't understand that. And so you won't get the money because there is a disconnect between the domain expertise and understanding. So that's an area where a low-hanging fruit is low tech, It doesn't require any special machines. It just requires that we take a different approach to how we actually support those small businesses, right? Where possible. It's not always possible to have domain expertise that cuts across the entire, industry classification, but perhaps we can look and see, who's borrowing most from us, what industries are coming to us a lot, and then align our businesses and align our staffing, especially where we're doing the adjudications, right? Until the machines start doing it for us, align that with that domain, with those domain requirements. That's number one. And then to give you an example of where you can have a high-tech version of that, right? So in the low-tech, you're doing domain expertise and giving those small businesses more comfort that you understand their businesses. In the future, I think that will become less needed, the actual domain expertise, because a lot of that, once we get on the blockchain, once we actually start opening up more of the financial industry, then a lot of that will become transparent, right? You will know if Randy wants to know if a small business is creditworthy, they won't have to send him any information. He will know it instantly if they're creditworthy, right? So in that model, that's really the panacea for small businesses, to be honest with you, because in that world, they will actually be treated with some level of equity. You know what I mean? Right now, they're punished for being small, but in that world, they won't be punished for being small because Randy will have access to what he needs to have access to make a good decision in a timely way, right? So just to sort of put a code on that is, I think that there are many low-tech solutions that can open up the channels to give better service and better access to small businesses. And I think there's a plethora of high-tech solutions that are coming that are going to change so there's a tectonic shift coming in financial services, a complete shift coming. And we all can feel it. And we know it's coming. We may not fully understand all of the blockchain stuff and crypto stuff, but just like in 2001 and 1999, we didn't understand e-commerce. If somebody said to you, hey, I'm going to buy something online, you said, what do you mean? Why would you buy it online? We all remember that, don't we? The whole idea of buying online would seem crazy, right? But now we understand it. So I think it's the same thing with a lot of these new financial technologies. They seem funny and sort of out there today. For example, NFTs. So the idea of having digital assets, and by the way, this will help small businesses because digital assets can be used as collateral for digital loans.
Yeah.
Right. So the same way we have gotten accustomed to have a painting hanging on our wall and it has value, we need to get comfortable with the idea that we can have a painting in the digital world that also has value. Right. It doesn't have to be physical for it to be valuable. And so NFTs speak to that, right? And so businesses who have assets will be able to digitize assets just like they have physical assets, and there will be digital asset classes that will garner investment, that will garner a transactional value in the marketplace. All that is going to happen, and I think that will open up opportunities for small businesses as well. Thank you.
All right.
Yeah, you mentioned that. I mean, that was important. But what we realize, as you said, the bigger banks, the bigger financial institutions are unwilling to provide funding for the smaller persons. But what I would like to know is, yourself, Michael and Randy, who are in the industry, how willing are you to work with institutions like mine who have access to a lot of these small business owners who need that kind of financing? How willing are you to take on this new kind of...
The answer is I'm always willing to work with anybody who's creating value, including yourself, for sure. But
okay,
let's make sure we understand what I do. So I'm not a lender. What I do is I provide technology that supports people who deal with borrowers. So lenders use our technologies to service their customers better. Lenders use our technologies to manage their business operations better, the entire value chain. So what we would do to support your lenders and the folks that you're dealing with in our technology, and this is, I'm not plugging our software, our business, but I just want to explain what we do. In our technology, we allow you as a lender to sit with a borrower, a small business person, and digitally capture all of their financials, capture historical information, capture current information, capture all of their key, and as you capture that, all the calculations are happening in the system. All the ratios are calculated for you. Develop scores, real-time scores that you can build so that as these customers are coming into you, you can quantify their risk across a huge amount of different parameters, right? So that's what our technology does today. One of the many things it does that would help you to do two things. One, to start triaging your customers better, right? Because that's one of the challenges. You get a whole basket of people, and the first thing you need to do is to start saying, okay, these are high risk, these are moderate risk, these are low risk, and then have different products and services to serve them, right? Our software will allow you to do that very quickly.
Okay. Okay.
Yeah,
Right.
and I'll respond to the question this way, that partnership is important. And I think what you find, as fintech evolves, especially in the more developed markets, you find that sharing of information and the access that every institution has to, most likely aggregated data across the financial sector helps to push innovations or make it that much easier for clients to, access financing. Because as Michael alluded to, the institution can almost pre-qualify customers and already know the target that they want to, they want to pursue for financing. So from that standpoint, I think partnering across the financial sector in, whatever way possible is important, because we have to get to a point where we build up from a sector-wide standpoint that database that allows us to serve our customers that much better. And just to add, from the customer standpoint, I kind of touched on the some of the cultural barriers. We have to be willing to embrace technology. Still there are a lot of people who don't embrace technology, whether it is for fear, whether it is that they probably believe that it somehow will affect their security. And these points are valid, but it requires you to kind of do the same research that you would do for kind of any venture that you're going into. Assess the partners that you're approaching, and make your decision based on that. But the key point is to get into the ecosystem then. You have to be willing to kind of share data and thereafter receive the benefit that will come.
Just to add to what Randy said, I do agree that partnership is very important, and people need to start coming into the fintech sector to have the sector grow and be recognized. The Bank of Jamaica has stated in their guidelines that one of the objectives is that they want the different entities in the fintech sector to really come together to encourage innovative financial products and services, because they want to promote the sustainable financial inclusion. And the only way that can be done is, as you said, partnership, coming together, pushing the boundaries a little, having the regulators understand that they also need to understand how the sector works, because they don't really, for them to regulate it, they need to understand and appreciate how it works. And I promise you, they don't know as much as you think they know. So I say Randy laughing because I think he understands. So it's really a two-way thing. Don't feel like, well, they have this black and white, but I don't think they understand. It goes back to the farmer and his financial products. The two people who don't know anything about each other's products need to come together to make it grow. So we have to push the boundaries and partner with somebody. You can't do it alone, definitely not. Okay,
thank you so much, everyone, for chiming in there. There is a question from a blockchain standpoint. How applicable is fintech amongst a group of farmers conducting business and trade amongst themselves, such as buying, selling, payroll, inventory, not necessarily obtaining loans or merchant services?
That's directly Michael's question.
Yeah, if I may, that's a great question and a great opportunity. So it's a great opportunity to, before I get into the weeds, to sort of level set on what the blockchain represents. There's a lot of confusion about these things. Like anything that's new, you hear a lot of things about it. So I'm going to just try to give you a simplistic but accurate explanation. So let's start with what we currently know. We know that there are databases in the world. We know that companies, people, various entities store data in databases. Your school, if you're a student, you go to school, the school has a database with your information there. The Ministry of Education has a database. You know, if you work for a company, the company has a database of your information. We understand that, yes? Right. And what you need to understand is that those databases are not distributed. They are owned and controlled by the people who own them, however many they are, whoever they are, whether it's a company, a person, you and your mommy, your buddies, whoever owns the database, doesn't matter, but they're owned. Good. Because they're owned, it means that you're limited in what you can do with those databases, and you're limited in how much transparency you can have in those databases. They're not your databases, so you can't see what's going on in there, right? Everybody understand that, right? They're closed databases. So the blockchain is another type of database structure. That's the first thing we must understand. So we know what current databases look like, we understand how they operate, and we understand that they're necessarily siloed. So here comes a different database structure that says, hey, we can all use the same database. When you say all, you mean everyone on earth? Yeah, everybody can use the same database. Well, how would that work? Well, that's where the blockchain comes in. So instead of you having your database and me having my database, everybody can create what's called a block of data in this shared decentralized database. Everybody with me so far, right? So if I want to store something, so my friend who asked the question about farmers, sure, it doesn't matter what you want to store. It doesn't matter what you want to keep track of. When I say it doesn't matter, I mean it doesn't matter. Just like it doesn't matter what you want to put in your database that you have on your computer. You could put your kids' information in there. You could put the number of crops you planted. You could put how much money you have in your account. You could put anything in there. It's your database. So it doesn't matter what you want to store on the blockchain. That's why the blockchain works for currencies. It tracks currencies and transactions. It can work for what we call smart contracts, which I'll explain another time, which are not, they're not smart paper contracts, they're different things, but it can work for anything. So your farming, the farmers could track any part of their farming business on it. They could put their crops in the blockchain. They could put how many, the seasonality of their yields in the blockchain. They could put their vendors who they're selling things to in the blockchain. They could put suppliers, people who sell them things. They could put their financials in the blockchain. There is no limit of what you can put in the blockchain. Here is why the blockchain is different than your regular database, however. When you add something to the blockchain, so when you create a new block, it is self-validating. In other words, if the Ministry of Education adds something in the Ministry of Education's database, we don't know if it's accurate. No one knows except the person putting it in. Everybody understand that, right? Because it's their information, it's their database. But when it goes in the blockchain, the way the blockchain works is a prior block that is being attached to must validate the block that is coming on through a whole system. I won't get into it in detail, but there's a whole system of calculations and mathematical formulas and algorithms that will validate each block. And all the blocks in the chain must validate each other. So you can then begin to see how difficult it would be to tamper with a block. Everybody understand that, right? So that is the magic in the blockchain. That's why it is called an immutable system of record, because any changes that happen in it cannot be done in the dark. No change could happen in a blockchain that wasn't transparent and open for everybody to see, right? So the answer to the question is absolutely the blockchain would support farming as it would support any business. And just to give you a classic example of how blockchain could support a farm is, let's think of a world where you have 5G technology, so maybe the farming equipment can speak to another farming equipment, right? Because that's what 5G is about, machines speaking to each other. So you have the farmer, he has his crops, and suddenly the blockchain is keeping track of everything, and he or she, farmer, can literally have smart equipment that knows, based upon seasonality, based upon rainfall, based upon crop cycles, when they need to be initiated in the process of production, right? So that's an example, a very efficient, a way to utilize resources to produce something. So that's my explanation around the blockchain. Hopefully that helped.
That surely cleared up some things for me. I hope the question was answered. I don't know if anyone else wants to add to what Michael has said. All right. So as we continue in the discussion, thank you so much, Michael, for that explanation and answer to the question. As we continue the discussion, I want to hear from Shanil about the Sandbox and when can a company be revoked from the Sandbox, if and when?
Okay, so I'm going to assume you mean revoked after they've gone through the Sandbox, because what happens is that before you're able to enter the Sandbox, you have to fill out an application form, provide the Bank of Jamaica with certain documents for them to assess it, see if they require other information to see whether or not they think the product or service that you want to have tested in the Sandbox is eligible to be tested. Two things may happen when you submit that application form. One, well, let me say three things actually. One thing is that you submit the application form, they'll say, great, I think this product should be tested. You provide them with all the information that I want. Here, enter the Sandbox, we're going to do the testing. That's one. The second thing might be you submit the application form, submit the documents you think they want, and they come back and say, well, after looking at what you've given to me, I think I need some more things because I'm not sure what the product is. I need some more clarity. I don't think this should be offered at all unless you do X, Y, and Z before you enter the Sandbox. And then the third thing, which might be very rare, is that they say, well, I see your product, but I don't think it's a fintech product. So we're not really concerned with you. So we're not going to regulate you. And that's the third option. Once you pass that phase, if you get the approval to enter the Sandbox, you're in the Sandbox, your product is tested in a closed market, whether it could be from 6 months to 2 years or a longer time if the BOJ requires. After that period of testing, the BOJ may say, great, your product works. We think it's safe for the Jamaican system. You have all the mitigating things, the mitigating factors in if there are any risk associated. Go ahead, put your products out to the general public and have fun. That's where you want to be. On the other hand, you may test the product for 2 years and the Bank of Jamaica say, you know, after all this testing, we don't think you're safe. You might go out there in the public and end up ruining many people's lives. You don't have enough protection in place to protect the consumers, because that's what the Bank of Jamaica really is. They're supposed to balance the great product being offered by the financial institution or the fintech company, but at the same time ensure that the Jamaican people are protected and they're not being offered something that somewhere down the line, something will go wrong and they have no one to hold accountable. So you may be very well experienced like Alaska, who knows what to do to get the BOJ to fall in line, or you may be a brand new small company who has no clue how to pass the first hurdle. But the idea is you need to try, because the only way the BOJ will understand your small business, which might have just a great product like Lasco Biz, is if they understand how you operate on a small business scale compared to bigger companies. Because it's not that, I think what smaller businesses need to understand is not because you're not big, it doesn't mean you can't do the same thing. You might not have a department for every risk factor, but you will have a system or a program in place that can still ensure all the risk factors are accounted for and mitigated. That's the important part. Because a part of the application as well for the Sandbox is that you have to explain how your different policies and procedures operate. It's really like a business plan, but on a larger scale. That's the key. Start off small and ensure it can expand, and just answer all the questions the BOJ offers. My rule of thumb is always try and just respond to the regulator. Don't take it offensive when they ask certain questions. It's not because they don't think you have it. It's because they just want to ensure that you're clear that you need to have it in place.
Okay. Thank you so much, Shanil, for responding to that question. I have another question, and it says, what requirements are the entrepreneurs struggling with as it relates to becoming a part of the Sandbox?
So
what are they struggling to because you mentioned earlier that there are certain requirements. I don't know if there's anybody who has been told that, you you have not fulfilled all the requirements necessary? What are they usually struggling with?
So I'll start off, and maybe Randy can assist after. But I think one of the main factors that entrepreneurs struggle with is the policies and procedures and ensuring that they're thorough. We have to understand that the Bank of Jamaica as a regulator is currently the regulator for deposit-taking institutions, which are the big commercial banks. These big commercial banks have very thorough policies and procedures for everything you can think of. And what the Bank of Jamaica is also trying to ensure is that Jamaica, as a financial sector, can operate like all the big countries everywhere else. They don't want to be lagging behind a US or a Canada or the UK. They want to ensure that the companies that they regulate are being regulated similar to the standard of those other countries. And I'll use one example, which is anti-money laundering. That is a very big thing for the Bank of Jamaica, because for some of you who don't know, we're going back and forth between blacklisted and graylisted because we don't have proper anti-money laundering legislation in place to ensure that certain entities, such as those who offer financial services, are following all the anti-money laundering procedures. So I think what happens is that when small businesses make the application, when they list out the policies and procedure, yes, they have a very general scope of what they want to do, but the Bank of Jamaica wants to know step by step. If they're supposed to walk into your office and follow all the procedures you have in place, that they can look on that paper and literally close their eyes and follow you through it. Not just, well, we meet once a month and we discuss X. They want to know, do you appoint an officer? Do you have certain procedures in place if something goes wrong and it doesn't follow the procedure? I think that is where a lot of the questions come back as, well, you said this, but what else are you going to do? That kind of thing.
But with all those regulations and eligibility requirements, does that preclude the small man? How does it sounds like it's just a big Glasgow can, be a part of this? Where does the little man fall?
So, right. So I just want to probably make a point of clarification that the fintech, the BOJ fintech sandbox is really targeted at those companies that are interested in offering financial service products using technology.
Yeah.
Now, I mean, just by wanting to offer financial service products with technology, you're going to need to be at a certain scale. As Shanice said, the regulations and the examinations that BOJ goes through are very thorough. And in her introductory presentation, she mentioned that you have to, in order to meet the regulations, you have to partner with a banking institution. Now, partnering with a banking institution, I can tell you, is in itself not an easy task. So the sandbox is really the route for companies interested in offering financial technology products to the market. What it allows is for these products to then be presented to the market. It offers more opportunities for small businesses, whether it be from a payment services standpoint and allowing them to accept and send payments digitally, or access financing through financial, more convenient financial technology-enabled services. So just wanted to clarify who the sandbox is targeted at.
Yeah, just to add, thanks for that, Randy. Yeah, so it's very targeted. They're not trying to say all fintech companies should come to the sandbox. It's very focused on payment services. When the guidelines initially came out, there was a blanket statement saying fintech companies must partner with banks. In their most recent amendment, they included language to say that if the fintech company is not offering a payment service solution, then they may not need a DTI. But we know when they use the word may, they may come back and say, well, I look on the product and while it might not be a payment service, I still think you need to have a DTI. And in my opinion, I think that's their way of also kind of ensuring that when you're being regulated, they will ensure that you're not breaking the law, because they know they heavily regulate DTIs now. So they know if you partner with a DTI, the DTI won't allow you to breach any regulation. So again, Bank of Jamaica is still trying to figure it out. They're starting to understand what they define as payment service now, whether or not what they thought it was 10 years ago and what it might be 10 years in the future is something they should regulate. Because we have the onset of e-wallets, electronic money, people using prepaid cards, all this new technology that they were just used to managing cash in hand. Now the fact that people don't walk with cash and they walk around with a watch on their hand or their phone and that is the money, that's the reason for the sandbox, for them to figure out how to still be the regulator of money here in Jamaica, but understand that it's not a financial, it's a financial playground, it's a fintech playground, sorry.
That's a lot. Thank you so much. Thank you so much for sharing those points. I want to know now, what are the opportunities? What are the opportunities that we see with all of what is happening in terms of DOJ's regulation, companies being approved, and fintech companies being available to the ecosystem? What are the opportunities that we I want to say, what are the opportunities that we see in the space around us? Are there other opportunities, that is beyond what we are seeing right now? I think Michael was speaking to that earlier when he spoke about the startups, and then he started speaking about high tech and low tech.
Yeah.
Right.
Right. So the great question. So first, Chanel, you're a wonderful person, and I have deference to you and your role. I have to say, banks will not be the solution. They never have been, and they never will be. Because banks actually don't exist to support small businesses. They just don't. It's not their, I don't mean that to be in a disparaging way or anything. It's just not their modus operandi. It's not their mission. Yeah. Banks are there to take money and find the least risky way to make revenue from it. Yeah, that's what banks exist to do. They're not in the business of taking risks on startup businesses or small businesses, and that's not their job. So let's talk about, where will the fix come from? Who has the solutions? Because as much as banks are trying to stay relevant in a world that is actually making them irrelevant, again, Shanil, with deference to you, you have a great role, and I'm sure BOJ is a great organization, but the irrelevance is on the horizon. And so who's going to help small businesses? So let's talk about crowdfunding, right? Crowdfunding is a sensible way to get other people to take notice of your business and help you with money. And there's actually a crowdfunding site here in Jamaica. I think it's called Get Funding. Let me tell you. I was actually on there a few days ago. I'm going to tell you what it's called. I think it's called Get Funding. Hold on, I'll tell you. Does anybody know the one? Oh, here it is, gogetfunding.com. Gogetfunding.com. I think that's a Jamaican site that has small business people. The problem with crowdfunding, before I move on, is that crowdfunding has become a needs-based business as opposed to an opportunity-based business, right? What you find on crowdfunding platforms is that people are just telling you, hey, donate to my need, right? I have some unfortunate incident that's happened to me or my family or my community, and they want you to donate. You do have businesses who are also saying, hey, I've got something of value here. It's maybe struggling a little bit. I need some help. But I think more of that needs to be, bubbling up to the surface and less of the needs based, so that people think of crowdfunding as more an opportunity than just a charity. You know what I mean? Right. So, but crowdfunding is definitely a great way for small businesses to start in this new economy, start going out there. Now, Chanel mentioned some of the cryptocurrency stuff and some of this new technologies. So, if you're a small business right now and you're looking at, ways to sort of move into the future, you should be looking at cryptocurrencies. Both from, I know that it may seem like, wow, nobody's accepting cryptocurrencies in Jamaica. I get that. But the reason you should be looking at cryptocurrency, not only in terms of transactional value, but in terms of investment value, right? Just like you would look at any other investment class, whether it's stocks or whatever you're as a small business. I'm not so much talking about startups now, but I'm talking about small businesses who might be looking at, say, how can I take $1 and turn it into 3 or 4? The crypto market is a market where you may be able to turn some money over with a lot of risk, I must say, right? There's a lot of risk there, but risk equals reward. So, you move at your own peril. Another area, I think, when small businesses are looking over the horizon and thinking about where they may be able to get some support in the new world is, as I mentioned earlier, this whole concept of NFTs. And I really want us to, when you leave this meeting today, this is one of those things that may sound really weird right now, but really spend some time and understand the concept here, okay? Because at the end of the day, the entire banking industry, the entire financial industry is based upon asset value. At the end of the day, right? There has to be some underlying value of something. And NFTs are going to upend that concept to some degree. They're going to upend the concept that all the value must be in physical things. And we've already gotten used to the idea that value can be in virtual things. We already know that. We already do it. If our money can be virtual, think about it. We're getting used to the idea that our money does not have to be physical. If our money doesn't have to be physical, then nothing else has to be physical to be valuable. Yes? If your money doesn't have to be physical to be valuable, then you can actually allow yourself to imagine lots of other things that can still be super valuable, but are not physical. And so that's the concept behind NFTs. For small businesses, that is a powerful thing, because what it's going to do, NFTs will operate on the blockchain. And so as we talked about before, when small businesses need money, right now they're hamstrung by banks who are asking them for physical collateral, aren't they? I want you guys to see the connection here. So when a small business goes to get money today, the very first question is asked is, so what kind of security do you have? Right? The digital asset world will change that conversation. That's the point.
Thank you, Michael. Thank you so much. Randy, you want to chime in?
Yeah, just to touch on kind of the opportunities on the horizon. So Michael touched on crowdfunding. I think an opportunity that is there kind of right for the picking is peer-to-peer lending, similar to crowdfunding, but probably a bit more formal. Basically, peer-to-peer lending, you kind of put an investment opportunity online, and persons from pretty much anywhere across the world can invest, usually with equity, in your business. Now, on the back of that, there definitely has to be some level of regulation or security for the person offering up those funds. However, again, the easiest way that somebody from Israel can know that a company registered on a platform in Jamaica is valid and is performing or is doing the business that it says it is doing, and investing their money according to what is laid out is through digital. So at the back end of any peer-to-peer lending system, you're going to find that there's heavy verifications and regulation of that business to ensure against, fraudsters, essentially. So peer-to-peer lending, I think, is somewhere that we can move to, and that will open up various opportunities for small businesses to look even wider in terms of globally, essentially, to access investment or financing.
And I'm going to just piggyback off Randy as it relates to peer-to-peer lending. One thing that small businesses can do to ensure that if international investor or lender trust them enough to lend them the money is to ensure that they have things in place. Simple things like ensuring that your filings are up to date at the company's office, ensure that the documents that an investor would request you have, so whether that's proof of ownership, proof of directors, proper resolution, small things like that, that if a company comes, they don't feel like you're operating a patty shop. No offense to patty shops, because they're great business in Jamaica. But you understand what I'm trying to say. The only other concern, no mean to be like a bearer of bad news, is that you just also have to be careful in what services you offer or request in Jamaica. Because as it is now, well, not anymore actually, as of June, before June, offering micro loans and things like that weren't regulated in Jamaica. But now we have the Microcredit Act. So you have to understand the regulatory landscape that we're operating in, and then try and benefit from that. There's no sense anymore in trying to have a black market approach to things and do things under the door, because in the long run, that will affect you. If an investor comes and says that, well, a couple months ago, you were trying to do something under the rug, they're not gonna trust you. They want to ensure that you are operating properly in Jamaica. There are many times where we have clients approach us about, yes, they want to invest in a Jamaican company, or they want to offer a loan to a Jamaican company. And we have to conduct, as Randy would say, a due diligence of that person that they want to invest in. And so when we conduct our due diligence, those are checks we're gonna make. Have you done your filings? Have you paid your taxes? Have you operated in accordance with your articles? Have you done everything that the Jamaican landscape wants you to do? Yes, it's good to look at the big countries like the America and the Canada and how much easier it is to operate there. But you have to think of where you are, you know? So that's what I would add.
Thank you so much. Thank you so much, Shanil. I want to just piggyback on what you've said and just ask the question that's in the chat. Andrea said there are many opportunities in the first class countries that a country like Jamaica doesn't have access to. How feasible is it to small businesses to have the same regulations as the first class countries do, whose economy can sustain that?
So I'll go first on that. I don't think it's necessarily that a first class country's regulations and ours are on the same level. It's that we are influenced and persuaded by their regulations, because at the end of the day, this is a global economy. If a first class country writes off Jamaica because we're not doing things in accordance with international standards, that doesn't benefit the country at all. So it's really a balance between ensuring that you have a first class standard of operation in Jamaica, but at the same time differentiating between small businesses, large businesses, and medium businesses, which is what we have in different pieces of legislation. For example, under the Companies Act, they acknowledge that they're small companies, certain companies that don't make the same amount of money as other companies, and they have certain exemptions given to them. Under the Microcredit Act, there's also different categories of companies, from small, medium, to large enterprises, and whether or not they will fall in the regulation of the Microcredit Act. So I don't think it's that we're trying to regulate a small business at a first class standard, is that we're trying to find the middle ground in how we can ensure that Jamaica remains an important country in the global ecosystem. We don't want to fall out of that, because then that would detrimental to our country.
I totally agree with you. Yes?
Well, I'm sorry, I wanted to just piggyback on that a little bit, because I think that's
Go right ahead, Michael.
I think that's a really great point. So the question is a good question. And I think so Andrea, who asked the question, so Jamaica is a great place to do business, first of all. And I think we have a lot of real problems here in Jamaica, but we also have a lot of perceptive problems that aren't really real. We just believe they're real. Like the belief that it's hard to do business in Jamaica. Like the belief that, oh, it's difficult to set up a company. Like the belief that you have to have links to make it work. Like we have real problems, don't get me wrong, but that's not a real problem. The truth is you can go and set up a business in one day. Yeah, maybe it'll take 2 days because you have to go get a stamp or something made, but it's not onerous. And the truth is, the same way you have the JBDC here, who's a government agency tasked with supporting small businesses, very first world, very first class initiative, you have it in every other country. Every country, Canada has it, US has it, every country has some government sponsored initiative to support small businesses. Again, if we believe the problem is that small businesses are suffering because people don't care about them, then that's one issue. I don't think that's the problem at all. I think the problem is that people want to help small businesses. I think, well, maybe with the exception of banks. But most people want to help small businesses. The problem is that we can't because, as I said, there's a risk issue, understanding the risk, yeah? And part of that aspect that I want to touch on that Chanel mentioned is we've talked a lot about the tech in fintech, but the truth is small businesses also have to adopt certain best practices so that they become investable, so that they become attractive, regardless of what the technology might be. Those things are perennial too, right? The requirement that you know what you're doing, the requirement that you have even just basic record keeping. And on that note, technology can play a huge role. I would encourage everybody, you may have seen the ads around YouTube, go and try this free software called ClickUp. If you're a small business person, go and try that software. It doesn't matter what discipline you're in, whether it's marketing, whether it's finance, whether it's operations, whether it's sales. This software is probably the best software I've ever seen. And it can help any business person organize your life, organize your business, organize your leads, organize your sales, organize your marketing. Like I don't get paid for saying that. There's no financial reward for me to say that. It's just, I think when you're looking at how technology can help small businesses, part of the equation is also how can technology help small businesses become more ordered in their operations? How can it help them become more transparent in what they're doing? How can it help them with better processes, right? So to me, if you're a small business and you're listening to this, you must be go use Google. I don't mean the search bar Google. Go use Google Docs, go use Google Sheets, go find some piece of technology that won't cost you a dime and get digital. That's what it means to get digital. You don't have to have a website, but if you're doing a farm, then start recording your stuff in a spreadsheet. Just say to yourself, you know what, maybe the time for paper is over because when it rains, the book gets wet and then I can't see what I wrote. So get Google, get Microsoft. They're all free at some level. You know, maybe they're not free at the big level, but there's always some freeness to them because they want you to use them. ClickUp, by the way, is free, except for like they charge $5 a month if you want to upgrade to some special features. But for the most part, the site is the software is free forever. So there's really no excuse, you know. So that's what I wanted to say is that there is some opportunities for small businesses to get themselves ready, regardless of what's happening on the tech side. Yeah, sorry.
Yeah, and I mean, you know, fully endorse what Chanel and Michael are saying. And I mean, the fact is how we catch up with the first world companies, it all comes down to data. Essentially, all that the first world countries have been able to do is build up that data or that database faster than us, because I guess in some instances they force it, but also persons are essentially more willing to go digital and, you know, create and by going digital, that creates various opportunities, because you really just have people sitting down and looking at this data and finding out ways that they can make things more convenient for clients or for consumers or for small businesses, essentially. So until we all get to the point of you know, plugging into digital or plugging into fintech, we're going to struggle, because, you know, large companies, I mean, not even governments to an extent, kind of have the time to really sit down and walk through a bunch of papers that you know, in order to offer you funds. But in as much as you can get organized, plug into products like Lascobiz, which gives you some you know, financial reporting, etc. That is how we can build up to, you know, even better opportunities.
And just to piggyback on Randy about the Get Digital, and this is not from my attorney seat, but just from a general seat, is that it's important to get digital. And Get Digital includes digital marketing, creating your small business digital footprint on the web, whether it is by the various social media websites or having articles or a landing page that is digital, because that's where everyone is. We take up our phone now, we jump on Google and we want something. You type in a word that might show you that a small business offers this, and that you don't have to go to Amazon and order it to bring it in Jamaica because someone here in Jamaica offers it. that's also an important part of going digital.
All right, very interesting discussion. I have two questions. I don't know if there are any other questions from our those persons that are on the platform, but my next two questions are in relation to JBDC. And what I want to know is, how can JBDC support the fintech space? How do you think JBDC can support the whole rethinking of what's happening now and the fintech space?
Yeah, so I'll take a stab at that. So, you know, we know what JBDC does. I mean, it's business development, particularly small businesses. I said before, forums like this are good. And again, partnership is good. So there are financing companies, there are loan companies who are looking for those small businesses that are best to partner with. So definitely, in as far as JBDC can facilitate access to those small businesses, or even access from the access for the small business to training opportunities, or helping us as the financier or the loan company to better educate the small businesses on what we require and how they can access the financing in the easiest way. I think that's probably how JBDC can partner with financial companies.
All right, thank you so much, Randy. Michael?
Sure. So that's a great question. So it's really important that whatever we're doing to help businesses are happening in a time relevant way. In other words, that they're happening within the times that we exist in, right? So, if you're helping businesses 20 years ago, the things that you'd have to help them to navigate and challenges that they would face would be very, very different than helping them today. And I would suggest that helping businesses now, preparing them for the next 5, 10 years, 20 years of operations. Many of the people the persons who are coming through your programs, they're going to be the business leaders in Jamaica in the next 5, 10, 20, 30, 40 years. They're going to have the businesses, hopefully. Many of them will have the successful companies that we'll be talking about and our children will be talking about, right? So with that perspective, then how do we prepare them for that world? That should be the mission of JBDC. The JBDC I think of should be helping with the digital evolution in Jamaica. Not just the digital preparing of people, but the evolution that's required in how goes back to what Chanel said at the end there. So if you're let's think about what I'm about to say. If you're having a small business person today who doesn't understand that you can't actually get customers unless you're online, then Randy can't lend to that person. And if Randy's lending to that person, he's already taking too much risk. So the JBDC must help Randy reduce the risk profile. And you're either going to do that tactically, training somebody to do, get prepared to submit documents and so forth, or you're going to do that strategically, which is really helping the young business people that we have now to recognize that it's a new world and that the skills you need to be successful in this new world, the skills you need about how to get customers, how to communicate with customers, how to deliver your product or services to customers are entirely different skills than you needed 25 years ago. Like just totally different skills. And so the success or failure of the JBDC, from my perspective, will be directly related to its ability to influence that set of skill sets, those set of skill sets rather, that small business people need now to deal with the new realities of business in this new entirely digital experience that we're building. Yeah.
Thank you so much, Michael. Scott, you've been very quiet. How do you think JBDC can support you and support the ecosystem in its fintech?
I think you're doing a good job so far, but maybe on your website, I mean, have a database of service providers. We're coming out of the pandemic now, maybe we can have more exposed, a monthly or quarterly coming together of SMEs, service providers, fintech firms, so we can highlight the services that we offer to persons who wouldn't normally know that these services exist. So that is definitely something that, you know, we could look into, and that would be an exciting thing.
Okay. Okay, thank you so much. And Shanil, I haven't forgotten you.
So I think to add to what everybody else said, because I completely agree that JBDC just needs to provide different ways for the small businesses to partner with various entities, because I think an important part for small business owners to understand is that they can't do it all and they can't do it on their own. If they try to do it all and they try to do it on their own, I don't want to say it's a recipe for disaster, but you're going to move pretty slow. It's very hard to navigate being a small business owner in Jamaica and compete with so many other small business owners on your own. You need the expert who can help you. Going back to the beginning where you have the fintech company and the farmer, you need somebody who understands the different areas you operate in as a small business owner, from marketing to accounting to legal to client relations to stakeholder engagement. You might find a person that can cover 2 or 3 areas, but it's highly unlikely that you as one person can cover all those areas on your own. JBDC should try and find different partners, and I'm going to say affordable partners, because I know that's a cry for a lot of small business owners, is that, well, I know I need an accountant, I know I need a lawyer, I know I need a marketing manager, but I can't afford it. There are a lot of affordable options out there. Not because somebody has a big name or a big company doesn't mean a small business owner can't go to them. It's just to find maybe a package that this firm or this company will say, well, if it's from JBDC and I know a small business owner, I'll provide this fixed fee or this discounted rate. Find a way that the relationship can work, because ultimately we're all here to make Jamaica better, and only we can make it better if we work together.
Great, great. I think you guys have answered my second question, which was, what do you think JBDC should focus on to support ease of access through your platforms? I think that has been answered somewhat. I don't know if anyone wants to add anything else to that, but there is a question for Michael from Andrew, who had asked about the blockchain earlier. Michael is asking, Andrew is asking Michael, is there an off-the-chain software for off-the-shelf software for blockchain? Michael, that's for you. All right, until Michael.
I'm sorry, can you hear me?
Yes,
Are you hearing me?
No. Yes.
Oh, the connection seemed to have gotten really weird there for a minute. So when you say off-the-shelf software for blockchain, so the blockchain is not really a software. So the blockchain is a system. So it would be like, is there a particular, it's not so much a software itself. So you have software, you have various cryptocurrency sites, you have various sites around smart contracts, Ethereum. But in terms of the blockchain software itself, maybe what I can think of would be Moralis. So MORALIS.io. Or maybe, well, Scribd is not really I think Scribd is more a smart contract site. Maybe to start your search, go to blockchain.com and see where that leads you.
All right, thanks, Michael. I think I'd want us now to wrap up with some closing remarks from each person. And Shanil, I'll start with you again.
So my closing remarks, everyone here, would be, as your theme is reboot, rethink, and regenerate. You have to reassess your business every chance you get. This pandemic has definitely been an example and a time for people to reassess whatever procedures they had in place that they thought worked to make it better. You have to rethink the landscape that you're in. You have to be aware of course, all the different factors, all the different stakeholders in the sector that you're in, and to just come out brand new, regenerate, find a way to be better, find a way to grow. It includes, of course, joining seminars like this when you get the chance to, talking to people, looking up things online, trying to find the best way to operate your business. And I know sometimes as entrepreneurs or just small business owners, we think there's this great idea that we have and I know the best way to do it. And sometimes you just need a third party to show you a better way to do it. Not saying that your way wasn't good in the beginning, but again, partnership, finding ways to grow and level up. So yeah.
Thank you, Chanel. All right, Michael, let me hear from you.
Well, again, thank you guys for the opportunity to come and speak to a stakeholder group that is, I think, the most important, both to our country and to me personally, which is fellow entrepreneurs and small business people who are actually creating value. So I think, and this is going to piggyback on what Chanel said, I think that in a world of tech, when the tendency is to focus a lot on the tech, a lot on the new shiny objects, I think I want to end with a reminder to all business people who are hearing me that it really comes back down to you. It comes back down to your investment in yourself. It comes back down to your willingness to do the things that are uncomfortable. It comes back to your willingness to be persistent. You know, having a small business, as everybody knows, is going to be difficult. And there are no countries in the world where it's not difficult to have a small business. Everywhere you go is going to be difficult. But what it comes down to, oftentimes, the difference between failure and success is less about access, it's less about tech, and it's more about the entrepreneur's readiness, the entrepreneur's resiliency, the entrepreneur's preparedness, and it's just the overall character of the entrepreneur. So I would say to all the entrepreneurs, all the business people out there, we are operating business right now in unprecedented times that we've never seen before. Not even our parents have ever experienced anything like this. So we're coming into this time as pioneers. And when you're a pioneer, you have to be open. You have to open up your mind. You have to open up your consciousness. You have to be willing to ask the question, why, for everything. Everything you should say, why? Why does it have to be that way? As Randy said, we need to challenge the institutions, right? So we should be asking why at every turn. Why does it have to be that way? Why can't I send money to somebody without a whole lot of in between? Why can't I, those why? And I think when we start asking why, that will create in us a natural, powerful energy of change. Yeah, an energy that says, well, it doesn't have to be that way. It wasn't written on the 10 Commandments. We can change it, and it's our obligation to change it. And so that's the energy I want to leave with you guys, is that change begins with us. We're going through a time when change is what's required. It is a necessary ingredient for us to create the future that we all want. Thank you.
Thank you so much. And before I go on to Randy, Scott, what are your closing remarks?
Yes, pretty much what everybody's saying. Thank you for the opportunity. And right, Michael was correct. This is a day and age where you don't need to fight with the larger institutions, each and every one. There is always a better way. And what Finance Hub does is provide that bridge between the customer and the lending institution. So whereby we don't give you the loan, we put you in a position where you have better access to these institutions and get the loan that you need. So it's important that you do your research and you come, and there's always a solution out there. So that's it.
All right, great. Thank you so much, Scott. And Randy.
Yeah, thanks again, Jacqueline. And, again, thanks for having me here. It was a very interesting discussion. So I want to close on, small businesses and consumers, ensuring that they protect themselves as we go forward in this fintech market and this fintech age. We beat up on regulators and we beat up on the banks and the law and stuff like that, but they play a very important role. It's important that as we try and step swiftly, we step safely and smartly into new opportunities. So as you look for opportunities out there, ensure that you research those that are, verified by the Bank of Jamaica, or, if the lawyer has probably done their due diligence behind it and recommend it. Ensure that they, in as much as they need to be regulated, they are regulated, because you're talking about your money, your hard-earned money. You have to protect it at every step. So let's, Michael kind of spoke to it. Let's probably avoid a bit the frills and the all the niceties that we probably hear about sometimes, and look for those opportunities that we know are forward-thinking, but at the same time safe. And that's just the one recommendation I want to leave everyone with. Thank you very much again.
All right, super job, guys, super. As I started out earlier, I indicated that JBDC's intervention services is financial literacy and readiness, and of course, access, getting persons ready to access finance. And I think today this discussion has really brought some, the whole fintech discussion has brought some dynamism to what we are about. And as Michael said, nothing is cast in stones. So that in itself also shows how dynamic this whole fintech world is. And I really want to thank all of you for sharing today. We looked at why fintech companies are important now more than ever, and really the regulatory sandbox guidelines that Chanel spoke of earlier. We also delved into how fintech companies are supporting access to finance. I think that's really where we wanted to go. And I think there's much more to be said on that. We also looked at how fintech companies are, supporting access to finance, and what are some of the requirements that accessing finance through the Finance Hub platform, of which Scott is the proprietor or the director of that company. And I really, really want to thank you, lady and gentlemen. Not very often we find the men outdoing the ladies. And thank you so much for joining us. I want to tell you all that I have enjoyed the discussion. I want to thank those on the different platforms for sending in their questions. And I hope you have understood as much as I did, and even more. Now our Global Entrepreneurship Week continues, and tomorrow we will be having at 12 noon the Entrepreneur's Journey, featuring the 4 finalists of our JBDC's Boss Award. And then right immediately following the Entrepreneur's Journey will be the Boss Award for 2021. So I look forward to those that are on joining us as we look at this year's theme: Reboot, Rethink, Regenerate. Thank you so much for joining us, and we enjoyed having your company.